course, it's been a roller coaster ride for the markets. The current trend thus far in July has been up. That like chick. Is that what's going to happen?
Yeah, it's tough to follow that one. But look, yes, this is me trying to decode the market rally so far in July. Now, of course, as we've mentioned throughout the show, very busy week on tap. But so far, it has been a pretty good July. Some notable moves here. NASDAQ up about 7.5%. The S&P 500 up close to 5%. And even you've seen that risk-on tone go back to some of these very risky meme stock names like a GameStop and AMC, both with double-digit gains so far in July. So what in the world is going on here? A couple things I cooked up here. One, you saw the Fed really push back on 100 basis point rate hike. And ever since they made that or did that pushback a couple weeks ago, that lit a fire under stocks. Next up, a lot of data hasn't been great, the economic data. But a lot of strategists are viewing this as no signs of a deep recession yet. Check done. Market likes to see that. Next, easing price pressures. You go back to that Philly Fed report, manufacturing report from last week. Prices paid down for 3 consecutive months. Market like to see that. And then so far, no real earnings per share disasters outside, of course, Snap. That was a full-on disaster, and maybe we'll get some more this week. But so far, we haven't seen that report, that really brutal, ugly, really bad report. And I'll add Weber there in this morning. That wasn't good. But by and large, haven't seen that so far in July. Now, this all could be tested very soon. The Fed is still likely to come out later this week and raise rates by 75 basis points. That is still a very, very large move. Also, too, big week of corporate earnings on tap. Coca-Cola, UPS, you're going to get a next level read on the U.S. economy and where things are headed and where they may not be headed. And last but not least, we're going to get GDP this week. And according to the GDP Live Now function online, we might see GDP in the second quarter decline 1.5%. It declined 1.6% in the first quarter. So that will likely spur all sorts of recession talk. Are we in a technical recession? Are we not in a recession? Whatever it is, that talk will come up. My take is this. Look, a lot of this could be unwound. I think now is the moment where you take off those rose-colored glasses and look for things the way they are. I go back to what we saw at a Weber this morning. That is a very, very, very worrisome earnings report, as was Snap. You could see maybe a little bit of a pullback on some of these gains.
Well, if you want some Google glasses instead, we can.
You're the master.
Yes.
You're the master of the Google glasses.
I don't think people have rose-colored glasses on, though. Sorry, what were you going to say?
Well, I was just going to say the question now is bear market rally, or did we actually see the bottom set in?
I'm not going to pick bottom. I'm not going there. Maybe old me would have done that. But look, we have not seen disaster scenarios play out in July. So I think that's what the market is hanging its hat on.
I mean, I thought the PMI numbers were pretty dismal. I mean, the thing that I don't know that people are wearing rose-colored glasses. I think things are going to get bad, but maybe they think things are going to get bad enough, going back to the beginning of the show when we talked about, that the Fed is going to pause.
So maybe they're wearing Google glasses instead of rose-colored glasses.
Maybe.
We'll go back and tweak that for the video.